Hi everyone, today let's talk about the debate and how it could affect the economy going forward. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Biden stumbled and Trump lied according to this headline. You can see here there were very different versions of America that they were each depicting. From what I saw, and I did watch the whole thing, I saw a lot of meandering and bumbling from Biden. Trump didn't talk about a lot of details, but he at least seemed to stay on topic a little bit more. And from what I've seen on the exit polls, it seems like Trump has potentially won this one. 67% of the exit poll said Trump won versus 33% for Joe Biden. In terms of economics, you can see they had different visions for China. Trump said he was going to continue his previous policies of being very harsh on China. And interestingly, Biden didn't really refute this. He also talked about how he was continuing a lot of the Trump policies with regard to the tariffs, and Trump wants to do more tariffs there. And then looking at some of these headlines here from across the different countries, India thinks that the Democrats considered themselves to be screwed. UK said Biden struggled and Trump lied, very similar to our own headlines. And then Germany thought that the overall debate was more civilized and that Trump was pretty uncomfortable on the immigration debate. I did notice that Trump did dodge a lot of those direct questions when it came to immigration, and we'll see how this plays out come November. And I did want to mention the predicted polls here for who's going to win the election. You can see Trump saw a major bump from 55 to 58, and he had already been trending higher from 52 to 58 cents. Biden has stepped down dramatically from 47 cents all the way to 33 cents. So Trump was already winning, and now he is winning by a lot. The spread there, 33 cents to 58 cents. The interesting thing here is that Newsom went from 5 cents on the 26th all the way up to 17 cents potentially as a potential replacement candidate for Joe Biden after this presidential debate. So something to consider there, a potential replacement candidate in Gavin Newsom. Moving over to fear and greed, we did step down to a 44 from a 46. This did step back down. We talked about that being a zone of resistance at this previous peak around 45. So we're back below that. We saw markets sell off here today. Still extreme fear on strength and breadth. Put call ratio has a lot of room to go if we were to turn down, so that's not great either. In extreme greed right now. VIX saw a little bump as you would expect, and then bonds both back into regular fear. Moving over to the economic calendar, you can see the PCE data came in at expectation, so light on inflation, everything we wanted to see there. Month over month came in at 0. Previous number was 0.3. Year over year, 2.6 versus 2.7 on the previous read. Everything there was good, except for personal spending came in lower at 0.2 versus 0.3, and then all of this Michigan data also coming in lower than expectations, and consumer expectations and sentiment were both positive. So all of the data today was pretty bullish. That was not enough to keep markets going higher. Moving over to Max Pain, you can see stock price 544.87, Max Pain 543. So we got pretty much a middle of the road finish there. Super choppy on the session, and we'll take a look at that on the charts. But Max Pain finish is what we got. Still above that 540 level and below that 548 level. Low in here 543. A little bit above that. Not at the top of the puts by any mean, but not at the bottom of the calls. Moving over to the charts, starting off with the S&Ps here, you can see this was a pretty terrible day, to be honest. So we gapped higher and rallied. Data came in, rallied higher, got all the way up to 550, which was a wick to those all-time highs back here from Thursday last week. And then we gave it all back, ended up down 0.39, held the level at 544. You can see we wicked that on the last candle of the day, found a little bit of a bounce there. But this is a huge reversal candle, and look at that volume. Massive volume, momentum accelerating to the bear side. To me, this looks like we're pushing back down to 540, potentially that next EMA there at 539.02. Big reversal candle, and I would expect follow through on this into the Monday and potentially Tuesday sessions. Moving over to the Tasty charts again, I really just want to highlight that bearish condition. We got up to the ATR resistance, so we did get there like we expected to, overthrew it pretty substantially, and then look at this candle, massive down candle on the 11 o'clock. Our vol was at 3.12, big volume on that selling candle all the way down to that 55 EMA there at 543.69 on the 4-hour candle. Lowest ATR down there at 539. This is really not good, to be honest. Big wick high rejection on this previous push. Another wick high, huge rejection. And I would expect more follow through like I mentioned. Moving over to the NASDAQ, very similar thesis. Big wick high. Again, got all the way up to 487, right at these highs back from Thursday and the Monday sessions from last week. And then reversed from that level. So from top to bottom, that's a 1.5% down move. So pretty substantial there. I did expect to hit that resistance, and we didn't get there at 489.24. Momentum bearish, RSI bearish. I expect this 477 level to break. Once we head lower down to that 471.93 in the 21 EMA, maybe we find support in there. But right now, this looks really bad, honestly. Big volume to the downside, and I would expect more follow through again in that Monday and Tuesday sessions. Moving over to the Russell and the Dow, the Russell actually did a lot better, 0.41. Similarly, it did get up to 204.60 and then gave all of that back, wicking down to these 202 levels, and then bounced back into the middle of that range here. Finished closer to the top, momentum bullish, still big volume, looked okay. Let's look at that on the hourly. You can see went higher, gave it all back, wicked my level there at 201.88, and then bounced into the end of the session. Still think this is okay to push that 206 level, looks better than the other ones. And then look at the Dow, Doji, big wide ranging candle, probably going to break more to the downside in my opinion, but as long as we're below 392.44, this is bearish conditions for me, and that's where we are now. Moving over to Apple and Microsoft. Both of these sold off a lot, 1.63 and 1.3%. Momentum bearish on Apple, momentum rolling to bearish on Microsoft. Both of these below the SMA on the RSIs now. Next level for Apple, 207.14. Next level for Microsoft down here at the trend at 439.85. Both of these look pretty bad. I would expect another follow through day on them into those potential support zones. Moving over to Tesla and NVIDIA. Tesla was positive 0.23, almost wicked that next level at 203.88, and then gave it all back, and it's down even more after hours. So again, I like this trade. I like it here. Really needs to hold up. Probably just getting pulled down by markets. And then NVIDIA down 0.36. It's at that 21 EMA, just above VWAP there. If this breaks, I think there's quite a bit more downside. This is really the first potential change of structure that we've seen in NVIDIA for a while. Could consolidate, could push higher from here, but I really don't like it. The wick high was 127.71. Couldn't get above 125.17 and hold. 21 EMA is 123.21. So if this zone starts to break, maybe this momentum starts to take hold. We actually see a relatively modest pullback down into the 101 or 106 areas, 111 or 106 areas. Moving over to staples and discretionaries, we talked about staples looking quite bad. It's right at the low here, potential for a lower low if this 55 breaks. That's at 76.51, so if that breaks here, we're headed down to 75.40. And interestingly, we saw both of these falling here today, so overall sell-off makes sense. That is an ominous sign when both of these are moving down together. Staples definitely more bearish. The structure on discretionaries is bullish, and you can see it is up a little bit after hours, but it did close below the SMA on the RSI with decent volume, so that's a little bit concerning. Tesla still looks good, but Amazon doesn't, so discretionaries might see a little bit of a sell-off. Looking at breadth, 20 and 50-day breadth, wicked some highs and then pulled back. 50-day continued to stay bearish. Momentum continues to roll to bearish. 20-day tried to go higher, got above that 51.75 level for a little bit. Momentum didn't step higher. RSI bouncing off that SMA, so that looks a little bit more bullish. Could be an initial test and we get a follow through on the next session, but this 50-day does not look great. I would expect that to continue lower, and it looks like a retest of the SMA, breakdown, retest, breakdown. And if it follows through on that, it's going to be quite bearish for markets. Moving over to the dollar was negative on the day, still bullish on the structure, and honestly I expected this to be more bearish after we got that data. I think that speaks to the resilience of the bullish trend here in the dollar. Weak inflation data should have taken the dollar a little bit lower, but instead we saw pretty decent strength, still holding well above that 9 EMA on the daily chart, still above the 144 on the hourly. Momentum seems to be rolling to bullish. We'll see how this plays as long as that 144 doesn't break there at 105.77. Tested it once, got a bounce. Looks like we might test it again and see, but overall still looks bullish on the dollar. And then looking at yields here, you can see again we got a wick low on the announcement, and then these turned quite positive on the day, 0.93 and 2.71%. 10-year rocketing higher. Pretty interesting to see that. 4.4%, well above the level at 4.35, headed towards that 4.55 area. This is not great. So as the 10-year starts to rocket higher, that could be quite bearish for markets. You can see last time we were rocketing higher, that was the second half of May where we had some weakness in markets. So we'll see how this plays out. 10-year showing a lot of strength here today. Again, could be ominous. And then looking at bonds, as you would expect, these fell a lot here today. Pretty interesting, honestly. I thought that data would have been soft enough to push yields lower and bonds higher, but it absolutely wasn't. Big move down, TLT down 1.86%, way further than I would have expected, even on a little bit hotter than expected data. So pretty interesting to see that. Could just be weakness in the equity markets, but we're below this trend here. Wouldn't have expected to see that. Wanted that zone to hold, and it has not. So again, a potential ominous ominous sign for equities and bonds. Moving over to volatility, move index went higher as you would expect. It looks like this is probably going to push to that 144 now. That is sitting at 104.65. And then looking at the VIX, I would have expected this to go a little bit higher with the volatility that we saw. It was a wide-ranging candle, which is definitely concerning. Lots of volume, lots of selling. We did wick a low at this previous low here from the 13th, touched that level just for a moment and then caught a bounce. So maybe that means something. We've seen that before, touch the level and then you see a bit of a rise up into that 13 to 14 area. Doesn't mean it's going to happen, but this is interesting. Moving over to my accounts, you can see I did quite poorly today, down about 1.5%, 1.25%. On these wide-ranging candles, I tend to do quite poorly, and you can see, and like we talked about on the charts, we are up about 1.5% early in the session, and then we finished down about 0.5%. So that's about a 2% move, which was not to the bull side. So overall, that was not great. Looking at the IWM, I'm still in it here to 202 with $1.50 credit for the Monday session. So I have a little bit of potential profit there, about another 50 cents. You can see that's up a little bit after hours, and I can roll that out to the Tuesday if I need to try to capture a little bit more there. I still like the IWM, and it did hang in there quite a bit better than the others. And then you got the Qs down $2.50 on the session. It did bounce just a little bit after hours, but I think that's more of a dead cat bounce. We'll see how it plays. And you can see I'm actually slightly bearish here going into the close with two calls at 482 and 485. And then I do have puts there for Monday at 478 for $1.20. So have a little bit of deltas on. We'll see how it plays. Slightly bearish going into that Monday session. Even if we get a little bit of a relief rally, I don't think it's going to be a very long-lived rally, especially with how aggressive that price action was into the close. Let me know down in the comment section what you thought of the debates and where it's going to take the economy, and what you thought of the other countries' comments on our presidential debate. And what do you think about charts? Is that reversal candle an omen for bigger down moves to come, or is it going to be short-lived and we're going to push past those levels in the next week or so? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.